Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to be discussing why Canoo, ticker symbol GOEV, G-O-E-V, why they crashed today. They're down 25% as we speak. And guys, this is another one due to a law firm class action lawsuit. So I've described previously in some of my other videos about why a stock crashed, that these class action lawsuits, usually they're because lawyers want to do a quick money grab. They say that a class action lawsuit is for the investors, but in reality, are they really for the investors, or is it because lawyers can charge a bunch of money to do these lawsuits? So I looked further into these claims and they actually do have some legitimacy, but it's not because the lawyers did an investigation. In fact, we're going to get into this, and in fact I think the lawyers are pretty phony in this scenario as well. However, there was some due diligence done, not by the lawyers, so we're going to get into that in this video. If you guys want to see more content like this, please subscribe to the channel. We do in-depth stock fundamental analysis almost every single day. It takes a long time to do those videos, and I put in a lot of effort into those videos, so make sure you subscribe to the channel and turn on post notifications for that. And the number one thing you can do for me is to like the video. If you like the video, it actually helps spread this content to other people on YouTube, so that's the number one thing you can do for me to help me grow as a creator. Enough with all that, let's get right into the video. Alright, so here we go with Canoo stock. As you can see, it's down 21% on the day. It was down almost 27% at one point on the day, but the full market has recovered just a bit, so this stock has gone down pretty substantially. I do not invest in this stock. As you can see, I did 0.001 shares at $20 a share, so I would have lost over 50% if I invested in this stock. But yeah, that's what this stock price is doing. It's reacted pretty negatively to this news, and I'm going to show you why right now. So here we go. GOEV breaking news. Rosen, a top-ranked law firm, encourages Canoo Inc. investors with losses to inquire about class action investigation. And like I've said before, these class action lawsuits are to fill the lawyers' pockets with cash. They're not really for the shareholders. You'll get like nothing in compensation. So personally, I kind of find these class action lawsuits kind of ridiculous, but let's just get into what it's about. So on March 29th, 2021, which was yesterday, The Verge published an article. So The Verge, guys, The Verge did all the due diligence here. The law firm didn't do an in-depth analysis on this company. They literally read an article from The Verge, and from that they decided to make their judgment on whether or not to pursue a lawsuit, which I find pretty ridiculous. They're not even using like a legal document in this case. But anyways, The Verge published an article entitled "Canoo's Deal with Hyundai Appears to be Dead." The startup also changed its tune on selling EV tech to big companies. The article stated that Canoo chairman shared the news Monday during an icy investor call, Canoo's first as a publicly traded company. The article further stated that when pressed on the previous startup's claims, the current chairman pointed to its prior leadership and that talk of potential partnerships was presumptuous. Finally, the article noted that Canoo quietly uploaded a new investor presentation to its investor relations website on Monday that no longer mentions Hyundai. So basically we got this guy, Tony Aquila. He basically changed his presumptions on what this company is going to be doing in the future. People had in mind that they were going to stop their own engineering and development, and they actually noted that several times in 2020 that they are going to focus on selling their techs to big names, and they even had talks with selling their tech to Apple at one point. So now that this has all changed and they're going back to their old model where they sell their own vehicles, that basically means something fundamentally has changed with this company. And we're going to look at the Verge article and go over exactly what they said, because it was actually a very good article and they did some really good due diligence here, so this is definitely a good read. So it starts off by saying Canoo and Hyundai to build electric vehicles appears to be dead. So this is basically the main reason why this stock is crashing. And just yesterday, Canoo had their first investor call as a publicly traded company, and Tony Aquila was not present. Also, the CFO of Canoo has recently resigned, and we can show this right here. on March 23rd to pursue a different job opportunity. So basically, Canoo had a deal with Hyundai and Kia to build vehicles on Canoo's electric vehicle platform, and this was announced in February 2020. So clearly a lot has changed since then. So this company was a SPAC in 2020, and they decided to de-emphasize their engineering line. So instead of building the cars themselves, they wanted to work with other companies like Hyundai, Kia, and they even said they drew interest from Apple at one point, as you can see right here. And now they are going to have to get back into producing these vehicles themselves rather than actually working with other companies to sell their tech and implement their tech into these cars. So as you can see, something fundamentally has changed about this company's business model, and this is pretty much why the company has crashed. And then with that, Canoo quietly uploaded a new investor presentation to their investor website. So I have it right here, and as you can see, there's no, we're going to scroll through it real quick, but they have no mention of Hyundai in here. So basically that whole thing with them marketing that they're going to have a huge deal with Hyundai is no longer a thing. And then Aquila also said that we have so much demand for R3 vehicles that they need to get that work done, and then they'll look for partnerships. So that just kind of seems like a blanket statement on his part, just to try to cover up what's going on. And then he basically goes on to blame the previous leadership of the company, saying, "You've got to be careful with the statements you make," and said they were a little more aggressive with the statements they made about the company, and that potential partnerships was presumptuous. So I have to say, I do find it kind of ridiculous that they were not transparent about this until their earnings call. It basically just shot them down at once, but I guess they are allowed to do this. But that also can explain why they are being sued. And then an important thing that Aquila mentions is that they refocused the business to help protect their intellectual property, which they thought that Hyundai did not really respect. So that's also a huge thing. If they had issues with intellectual property with Hyundai, obviously the deal can fall through, and that's a big thing, especially with something valuable like an electric vehicle drivetrain. I can see how that can cause issues. So what it sounds like is basically this whole intellectual property dispute came up and they couldn't really settle it. Aquila thought that the intellectual property for Canoo was much more valuable than Hyundai valued it, so they wanted to focus more on their own systems. It makes sense. It's unfortunate. Something fundamentally has changed about the company, but in the end, it does make sense that this did happen. So going forward, is this a good price for this stock? As you see, their revenue went up to about 2.5 million in 2020. They didn't have numbers because they didn't report it as a public company in 2019. However, I think it's good that their loss from operations only really went up around like 17 million. A lot of the times there's a lot of costs associated with going public, so the fact that they didn't lose too much with going public, I think that's pretty good. Also, their net loss went down by about 100 million, and a lot of this is due to it going public, so that's also really good. You can also see this juicy number of $629 million, and that's due to its PIPE financing. So its cash flows went up a bunch in 2020, which is also really good for this company. So you can also see this as a discount, as a priced in version of this company doing what they're doing now, what Aquila has explained them doing now. You can see this price as what the company is worth without the Hyundai deal. And you can even see that as a discount going forward, considering they have a huge amount of cash, not too much debt. Most of their liabilities are just a bunch of earnouts due to the shares and just costs of going public. And look, their assets completely outweigh their liabilities, which is always a thing you want to see with a growing company. I think this is very healthy. They have plenty of money to invest in the company and improve themselves. So if you do believe in this company, it actually is a pretty decent price going forward. So guys, basically in conclusion, what happened with this company is they basically lost their deal with Hyundai, which took a huge hit on the stock's share price. The phony lawyers literally read an article from The Verge and then made a decision on whether or not to do a class action lawsuit. They didn't even look at the company's financial statements, which I think is pretty whack that they just base it off an article. But that's besides the point. The Verge did do a good due diligence on this company, and their article does actually have some good information. A lot of what was priced into Canoo's share price before was their deal with Hyundai, so it makes sense if this deal falls through that the stock price will take a hit. That being said, this company is in a very good financial position to be a growing company. They don't have too much liabilities. They have a lot of cash to further grow their company, so I think it can be really great going forward. And if you do truly believe in Canoo as being an electric vehicle company on their own and not having these partnerships, then I think this could be seen as a great discount of getting into this stock. That all being said, that's all I've got for you guys today, so I hope you guys enjoyed. If you have not already, you can use the link below to sign up for WeBull, where if you deposit $100, you can get 2 free stocks valued up to $1,600 a stock. So it's basically free money. Like, I don't know why you wouldn't do this if you haven't already. I did it. I got my free stock and it was good to go. So yeah, if you haven't done that, do it. That's all I got for the video for you guys today. I hope you guys enjoyed. I hope you guys learned something. If you guys have not already, remember to subscribe to the channel. And the number one thing you can do for me is to like the video. So like the video before you leave. That's all I got for you guys today. And peace.